Hello and welcome to your March Investor Update. I'm James McManus, Head of Investments at Nutmeg. In this update, I'll run through what moved financial markets in February and explain how it shaped our thinking. I'll also touch on some recent portfolio adjustments made by the Nutmeg investment team. What happened in financial markets in February? Well, it's been an interesting month in global financial markets. Investors had a lot of geopolitical news to digest, particularly in the US, where the new Republican administration was busy in its first month in office. Global stock markets saw some divergence in performance. Regions such as Europe and China have performed well, while others such as the US have seen a dip in their stock market performance. In Europe, there are some signs of changing sentiment, with indications of renewed confidence in the region's prospects. European stocks made gains, up 3.5% over the month, while there are notable gains in Germany and Italian equity indices, up 6.3% and 7.2% respectively. And alongside better than expected company earnings, hope has begun to build that we can see a resolution to the Russia-Ukraine conflict. Now, this path is by no means certain, and as you will likely have seen, the tone of recent meetings on the world stage about that conflict has been mixed at best. In the US, we saw stock markets fall back a little bit over the month. The S&P 500 index, which reflects the performance of the 500 largest companies in the US, was down 1.3% in February. And that decline was led by growth-oriented stocks, such as those in the technology sector, which finished the month on a weaker footing. The growth-focused Nasdaq index declined 2.7% in February. Now, the most recent earnings season demonstrated the US stock market's potential to deliver earnings that outperform expectations once again. But investor enthusiasm in February was tempered by the US macroeconomic picture. Consumer confidence fell to an 8-month low, while investors were disconcerted by service sector data that indicated a surprise contraction in activity. And against a backdrop of changing tariffs narrative and the geopolitical worries, some investors are beginning to question the stability for US economic growth and the case for US exceptionalism. Does this change how the Nutmeg investment team views the US as an investment destination? Well, we think it's far too early to conclude that US economic growth is on a weakening trajectory. Despite several high-profile data points offering a more muted viewpoint, manufacturing activity appears to be turning up, consumption remains strong, and the labour market's key indicators are robust. We continue to take the view that a recession in the US is unlikely. But as we flagged in our 2025 investment outlook, both stock market valuations and elevated geopolitical and policy risks increase the potential for market volatility. So we retain our preference for US assets across our portfolios, but as always, we remain globally diversified. A good example is our exposure to European stock markets, where we remain neutral relative to our long-term allocation. That is to say, in the short term, we don't think the case for investment in the region is stronger or weaker than in the long term. However, we do have some preferences for certain countries and sectors where we believe the investment case is strongest. For instance, European industrial companies within our equity holdings. Now, the industrial sector comprises of a wide variety of companies, such as those in machinery, manufacturing, defence and aerospace. And industrial activity tends to benefit from buoyant global trade. And despite that looming risk of potential US tariffs, global trade volumes have seen a steady rise over the previous 12 months. We think European industrials are supported by three main drivers: rising global trade, the potential for upside in corporate earnings, and the potential for a meaningful increase in European defence spending in the current geopolitical environment. We also currently favour the Nordics over the broader European region. We think that the macroeconomic picture for the Nordic countries is currently brighter than that of the wider European bloc. Nordic stock markets have also demonstrated strong relative performance over the previous decade in comparison with their European peers. Is the Nutmeg investment team making any portfolio changes? Well, we've made a recent adjustment to portfolio's US equity holdings, adding a position in the financial sector, which comprises banks, insurance firms, and credit providers. And we've done that for several reasons. Firstly, we think the economic backdrop for financials remains attractive. The US economy appears to be growing at a steady pace, and we expect banks to continue to expand activity through activities such as lending as the economy grows. Secondly, interest rates remain elevated, yet at the same time off their peak. Now, the Federal Reserve is in no rush to cut interest rates, and we expect it will take a steady approach as it balances the pressures of inflation and growth. Higher interest rates tend to be good for financial institutions as it can increase earnings potential so long as they are not constraining economic activity. And we think we might reach an interest rate sweet spot for US banks over the coming 12 months. Additionally, we believe there's also the possibility of further deregulation under the new Republican administration, including watering down or scrapping of proposed costly regulations. So our position in financials really reflects us remaining positive on the overall US economic trajectory, while leaning towards a sector we expect to benefit from both the current stage of the economic cycle and the current policy approach of the Republican administration. Thanks for watching. If you have any questions or suggestions for a topic you'd like us to discuss in next month's investor update, you can contact us via social media, email, or in the comments section below this video.
As with all investing, your capital is at risk. The value of your portfolio with Nutmeg can go down as well as up, and you may get back less than you invest. Past performance and forecasts are not a reliable indicator of future performance. We do not provide investment advice in this update. Always do your own research.